Hello guys, it's your quant Julien. I'm with my dear friend Lee, OG trader, I would say, or perhaps trader who crypto, I would say OG who moved to trading recently. And the goal of this interview is to get to know more about who you are, what you are doing in crypto, and also like mainly your trading in crypto, because that's pretty cool. You recently moved to trading in crypto. So why, what's your trading style, all this kind of stuff. I'm gonna ask you like few questions and to extract as much, I would say, info about your trading style as possible. So if you can introduce yourself a bit, your journey in crypto, feel free.
Sure. Yeah, thanks for having me on, Julian. Appreciate you inviting me on the show. So I started not that long ago. I mean, it feels like a long time when you are in crypto. Time kind of goes very slowly. So it was around mid 2020, I came in, discovered NFTs. So my trading journey actually started with the most high risk, highly volatile assets at a time when they were really heavily booming. And so I came in through quite an exciting period of NFTs. Had to learn some of the more like technical side of like how to mint an NFT through a contract and things like that. And was flipping a lot of ETH at this period in time as we moved into 2021.
So can you give like it was 2021?
Well, end of mid 2020, and then 2021 was when things really like took off, right?
Okay, yeah.
And then it was throughout that year that I kind of really like started to learn about trading, right? Because when you're not a trader, you think, and you make a little bit of money, you think you know how to win, right? You think you know what you're doing. You get a little bit overconfident. Doesn't matter what asset class. And so I was definitely in a period where I was trading these NFTs very comfortably because it was very easy to make money. There was nobody that wasn't making money unless you just like were stupid or something, right? And so, long story short, we went into a bear market. I was holding a bunch of NFTs from the top, sold a bunch as well, but then I was still sitting in a lot of ETH. And then I pretty much held the ETH down, at least 50% of it down to like the bottom. Lost some value both on the NFT value and then the ETH itself. And then I found myself in this bear market where I was still in the NFT market, still looking for opportunity, looking for farming opportunities. It was really, really dry time to be trading and trying to do anything. The crypto markets were rough. There was very few long opportunities. It seemed like everything was down only. And then throughout last year, 2023, the beginning, kind of end 22, 23, I started to dive more into trading. I wanted to learn how to be a technical trader because there were certain habits and things that I was doing in NFTs that were getting me wrecked, right? Like oversizing, losing big, winning big, and just things that I feel weren't very long-term sustainable. So I wanted to learn proper things like risk management, sizing, and just all the correct ways of just approaching trading with probabilities thinking rather than thinking I'm going to go all in or nothing. As I think that was definitely a newbie mindset. And then I spent the past year firstly studying it, and then I've been heavily trading in the markets, both on perpetuals and spot. Yes, I guess about coming up to a year now.
Okay. I think that's very interesting. Like you learn trading to kind of cure your NFT, I would say, depression, because I think NFT was one of the hardest bubble during the life cycle because, as you mentioned, floor prices went down, ETH went down, and it's kind of like a less liquid asset. And I think you are way more attached to it rather than coins, because coins are all the same. You can always buy them back on the market. Where NFT, I think you are always attached. You had it as PFP, or like, do I sell or not? And I think that's pretty hard. And always the same thing is like NFTs are kind of like adding leverage to your ETH. And until ETH is really like super hot, really overperforming, I think it will be hard for NFT to overperform. When trading, you can always do things either on bear market, bull market, ranging market. You always have some things to do. So how would you define the kind of like trading you are doing, like, and what's your goal? Is it like managing your money, being richer? I don't know.
Yeah, my goal with trading is really about wealth accumulation. Prior to Web3 and getting into trading, I was always very entrepreneurial. I started a couple of businesses in the online space, e-learning, coaching businesses. So I haven't worked for anybody since, I don't know, like 2015. I haven't had a job. I haven't had a pay slip. I was a trainer as well for a period of time. So I've been very kind of self-proficient in a way of just like finding ways of making money without the dependencies of corporate. And trading is, of course, like that holy grail of working for yourself, truly for yourself. You know, in a business, you have people, you've got you know, other problems outside yourself that you have to solve. Whereas trading is very much around solving your internal problems, your psychology, your emotions. So that idea is really what attracted me to taking it more seriously. And of course, from discovering and making money in the space, naturally you feel more, you know, you feel like you want to explore it further because you've already had some success. And so it's like, how do I get to that next level? And of course, like we said, NFTs are a very illiquid market. When they're hot, they were great, but when they're not, they're extremely hard. And also, you know, you don't really pick up good habits in good market conditions. You end up becoming very greedy, oversizing. And, you know, I was very humbled by the bear market because you learn these things on the flip side of losing more, taking bigger risks and not getting the next day to make it back. And so I went through a very challenging period, but that's the kind of thing that I like to do. I like to challenge myself. And so where I want to take this is, this to be the thing I do, you know, to create wealth. I see it as like, it definitely is the fastest, but the hardest route to wealth. Fast, when I say fast, I don't mean like you can get there tomorrow, but like to achieve what people have achieved in trading and business takes a lot of years and time. But of course, on the flip side, you can lose it all as well. And what I really enjoy about this is like, it's a game against yourself. It's about how you deal with your emotions, your psychology, your decision making, and it's just like you against yourself. And that for me is like the greatest part of it. So yeah, the goal is really just to expand wealth, and then at some point, you know, take the foot off the gas and be a little bit less, be a bit more passive, but still have some element of trading.
I really like your quote, like, I got humbled by the bear market. And I think that's the cool thing we have in crypto is like, you are able to learn because the market is the cycle of the market are so short compared to like the traditional market where it's like more decades. You're able to learn so much in a short period of time. And really all the guys who are making it or who have really bridged in terms of like, they are now not degens only, but are using like advanced, I would say, more optimal strategies are guys who got humbled through the bear market and really built like their plan, their strategy to make it. Of course, everything we are saying is not financial advice. We are not recommending anyone to trade, right? It's just like I'm convinced that, and that's the thing you kind of like said indirectly, is like people talk a lot about becoming an entrepreneur, building companies and everything. And I think it's super hard. And people underestimate the impact of trading. And one thing I always say to people I'm chatting with about people who have a bit of net worth is like, if you do like 10, 20% a year on your net worth, is your life changing? Like, and many people, it's like life changing because they will make more than what they work for and everything. So that's why I think trading is super powerful. You just need to stay humble, as you say, manage your emotion the proper way. And that's something very hard in crypto. So how do you approach risk management, especially in crypto in this volatile market? And how do you adapt your strategy in this fast moving environment? Like, because you are doing some fundamental analysis and also some technical analysis, like how does it work?
It's funny. So this phrase, risk management, it was like, it didn't mean anything to me a year ago. And it was the repetition I kept reading and kept hearing traders talk about this thing, risk management. And I was like, yeah, you know, I know what I'm doing. I'm risk managing, and I'm prepared to lose. But truly, you know, are you really prepared to lose this? Because that is always the downside risk of a trade. And I think until I truly started to come to terms with the downside risk and really understanding there is a fair possibility that I lose this trade, that was when I started taking this concept of risk management seriously. And I think when you come into trading, where maybe you're new or you've been doing it a little while, you've had a few wins, the concept of risk management doesn't mean anything to you because you haven't experienced loss. And so again, through the big losses, and I experienced some big losses, particularly in NFTs, from being, again, greedy, trying to win big. Usually that, I believe, stems from a lack of confidence in your abilities to consistently make money or just pure greed. So those experiences taught me that I'm not always going to be right. And those bigger risk plays are the ones that expose you the most and actually set you back. So you might go 2 steps forward, but then that big loss can take you 4 steps back. And so then you then have to mentally rebuild yourself and financially to get yourself back just to where you started. And so those experiences taught me that I need to understand what is the downside risk and truly kind of sit with that and accept that there is a chance that this downside risk plays out. And I'm okay with that because I've calculated it based on my portfolio, right? Whether it's like a 1% trade or a 3%, or like I'm feeling like this is a great trade, maybe it's a 5%. Only when I started using percentages of the trading portfolio did I start appreciating risk management, because anytime that those stop losses were hit or those trades were cut, I knew that it was only a percentage of the portfolio. So I've been able to get right back on the horse and find that next trade, right? And not let that one bad trade hold me back. Because the times that I took a 10% loss when I was trying to size up, or 15% I took a couple of times, was like, oh shit, like, you know, you really, again, get humbled and realize that you can't just be so frivolous and like risky, because you've only got another 4 more chances or 5 more chances and then you're done. You know, this game's that you're out of the game. And so those experiences of big losses taught me that I need to calculate based on percentages of the trading portfolio, and be accepting of that risk before going into the trade, and not going too heavy that makes me feel over leveraged.
And I think it's even more important for you because I had access to a lot of your trading and your trading style, right? And I think you do kind of like a lot of concentrated bets, because I think you are kind of like combining some fundamental analysis, Twitter sentiment, and then technical analysis to get the best entries and manage your risk and your trade. So I think you are kind of like mixing both of the best word, which is like super smart. I think that's the key point of guys making it in crypto. Plus, you have been humbled by the bear market, which is very important in crypto. And I think the cool thing is like, and this is why risk management is so important for you, is because of like you are doing concentrated bet. I think you are doing more concentrated bet than I'm doing. That's the thing I'm leaning more towards these days, is like trying to reduce the universe of coins I'm trading, try to put a lot of pressure on like sentiment analysis, fundamental analysis, going deeper on like coins and trying to time a bit more the market fundamentally and like with the news and everything, and then being able to click and size big position on this conviction, which is the hardest thing. And that's the thing I think you seem to be very, of course, not comfortable, because it's never comfortable to do, but you seem to be very like rational about. And I think perhaps like you have a way better, or you have a different approach to risk management than I have, because as you mentioned, it's like you always have a stop loss, if that makes sense, with a fixed loss of your portfolio you're able to lose, right?
Yeah. So if it's on perpetual and like there's leverage, of course, like there's a much more, you know, definitive stop loss that you almost like have to put in as a contingency. When I'm on spot, and it really depends on the time horizon, right? Like one of the things, especially in these very recent market conditions where we've gotten very bullish, I'm starting to accept that you need a wider stop. You need to be more accepting that there will be some bigger pullbacks, just like we've seen recently, for the greater of the upside. And so those positions have changed, because I used to be a bit more like higher leverage, and a bit more aggressive, whereas like I've taken the leverage down in the past couple months, to give myself more leeway, right, to like build the position a bit more gradual, a bit slower, so that I'm not like fully sized in a position and then like I'm getting shaken out.
Shaked too much,
and funny you say like I'm more concentrated bets. You know, that wasn't me like when I started properly trading, like I said, like last year, because when you're building confidence and you're trying to get good at something, you feel the need to do it lots, right? And so I was doing a lot of charting on the 4 hour, sometimes 1 hour, taking those trades. Some worked out, many didn't, you know, and then it was just building confidence in a system. And so the beginning for me was like, okay, do I feel confident taking trades? You have to take lots of trades. And so now I'm just at a point where I'm seeing the market rewarding holders more, right? Where more swing trading and holding positions rewards people more than trying to scalp, especially when we're in this heavy uptrend. And so I'm trying to also take those bigger bets with more conviction and size, just purely based on like I prefer that, rather than taking loads of smaller trades, and then like also the mental energy it puts to find those trades, to get stopped out, to find the next one. And actually, and when I look at the wins and losses, like the big wins have always come from those like more concentrated bets where I've built some conviction, maybe based on TA
Yeah, of course.
initially, and then go back and do the fundamental. And so that's kind of what I'm finding works for me, is like there's a technically good looking setup, and then the fundamentals is like getting me kind of excited to take the technical setup, or vice versa. But if I just see technicals, it's like there's loads of good setups right now, but there's an opportunity cost of being in a trade that doesn't move.
Yeah, so many good
If
setups.
you're not convicted, right? So you got to be in one that you truly believe is going to play out. Otherwise, you could be sitting in one and doesn't happen for a long time.
Yeah, and I think that's the very important thing, is like adding confluences to your trade makes it increase the probability or increase the decision making you have, and that's something very important. And I think fundamental analysis is so important in crypto because the assets are changing in terms of like universe. Like you have new coins, you have coins who have super bad token economics, and I have seen, for example, a guy telling me, "Oh, DYDX is heading to $12, like last all-time high in terms of prices," but the coin got diluted 4 times. So it's almost like close to all-time high. So I'm like, bro, no, it's not possible, because if you had the small fundamental check, you will not enter a trade like that or with this entry and exit plan. And that's why fundamental analysis is so difficult in crypto. I also think that's why I would say traders like you can really overperform many funds and many like very smart mind, just because you need to have a bit of everything in crypto to make it. Where in traditional finance, it's a bit different. Yeah, I really like what you are saying. I think if you can speak just a bit closer to the mic, or a bit
Yeah,
more,
sure.
higher, will be perfect. Short question: where do you trade?
So I trade on Bybit. Can you hear me now? Is the volume?
Okay.
Can you hear me? Okay.
Yeah, perfect.
Okay. Yeah. So I'm trading
Yeah,
on
perfect,
Bybit. Bybit, I trade both spot and perpetuals, and then I also do some on-chain as well. So ETH mainnet, and then sometimes, if I'm feeling DJ and I might jump on the other change, I also have do some trading on Solana. Main place is Bybit. I like the fact that they just very liquid. There's a lot of listings. They seem to be front running Binance a lot of the time, which was a good period last year where they were getting listings ahead of Binance, and then Binance was like the exit pump. I just like the user interface and experience. And one thing, I like taking positions from the app on my phone. I don't know why. Like I chart on my desktop, but I like to place positions and like
the app is the best.
I don't know. I don't like using the desktop, so that's just how I work. And then I like to check TradingView on my phone, like once I've got all my indicators.
I think it's one of the key success of Bybit. I think one of the key success of Bybit are they're really focused on the mobile kind of like experience. Link in bio for Bybit, guys. Of course, be always cautious on the centralized exchange you choose, but trading at the right place is also super important. And I think you mentioned the thing I wanted to say about Bybit is, I think in the last few months, Bybit was always front-running Binance and other like places in terms of listing. And by being on Bybit, you are more reactive to that, and you are being able to react a bit faster to all these, I would say, opportunities. Another question I had for you is, what are the tools for your trading strategy, more technically speaking? Do you use any indicators? Have you built your own system, or are you more like a price action guy?
Yeah, no, a little bit of everything again. So, learning and like studying different types of trading styles and different people who have all equally have their success. I find myself using these indicators kind of like depending on what I'm looking at. So the RSI, of course, I think everybody probably has one of those on their charts, relative strength index. And then I've also got the stock RSI as well on my charts, and just to see if there's any confluence. Again, I don't look at every indicator and like they all need to add up, but like if there's a further confluence on that one, I like to see when that one's kind of bottomed out, just to see if there's any upward momentum. The EMAs, use an EMA set of just like 3 different EMAs. I think like 13, 25, and 32, just as like a trend kind of formation. And then support resistance, good old support resistance, horizontal support and resistances. Keep it very simple. The odd time I might use the odd diagonal line for breakouts, but I'm not really a breakout trader. I'm more of a trend trader, or like buy the disgusting bottom that looks like it's going to die trader, who tries to knife catch sometimes. Sometimes it works, which works great.
Okay.
Sometimes doesn't, but that's just that which I'm learning is down to how I've approached those bottoms. Like when we were hitting a very bleak period just after the Bitcoin ETF, I was ready buying the bottom, but then I went in with too much leverage and also just shook myself out. But it was like the bottom of all the alts. But yeah, I typically use price action when things are looking really good, or just try and find like really like good entries at like deep supports. And that's all based on sentiment as well. Like when I see on Twitter, I'm reading people's bearish sentiments getting bigger and calling for 50k Bitcoin, or saying the bull run is done. When it gets really bearish, that's where I really and also when I'm feeling scared like internally to buy, that's when I like to take action more, which I did in the past week, and now I'm kind of sitting back letting things play out, because that was the worst time, emotionally to buy, but the best time at the same time to start positioning yourself. So yeah, it's a couple of the indicators, and then playing more into like the sentiment to decide when to start taking positions. And sometimes I'm a bit too early, right? And I get chopped out. Luckily, I try and make sure I'm risk managing and not like going too hard, but I like to be ready when the time comes to like push my foot on the gas and go when it's like when we're closer to some bottoming formation, which was kind of what I saw last week.
That's very interesting. So I was a bit on my phone because I had 2 trades running. I have exited one position on a coin, and I shorted yesterday XRP, and I fingered a bit. I did a zero. And I did a small wick, and so I had a fucking bad entries. And so now I'm in positive, but it was a bit stressful.
Okay.
What?
I'm long XRP. I'm long XRP right now. You're counter trading me, man.
Oh yeah. Okay. No, I'm short because of the news, and it's always the same for me. So just a reminder is like always, guys, when you're on Bybit, use maximum like 2 or 3x leverage, cross or isolate. Like that, if you do 5 fingers, it really helps you. And for me, for example, I'm short some meme coins and XRP and few other coins. It's just to edge a bit my portfolio. It's just like, because that's something I wanted to mention. Is a small advice, like generally speaking, is like, I think there is 2 types of trading. There is a type of trading that I call more like the FX trading, where you try to enter setups pure technically with, I would say, stop loss and very tight risk management in percentage and everything. And then you have more the crypto, I would say, risk management, where it's more like continuous, I would say. And so you manage your exposure in percentage, and you're like, okay. And for example, right now I'm long like 130%. And so I just want to edge a bit, like 10, 20% to get back and to try to make money, not because I take more risk, but just because I make smarter trades. And because it's always the same, in crypto, and it from NFTs, like most of the guys make money not because they're smarter, just because they take more risk than you. And this could be a strategy, but it doesn't last. And at some point they will get squeezed. You heard about free AC, you heard about Alameda blowing up, and that's always the same thing. Like, understand how you make money and why you make money. And that's the thing I really like in your trading style and everything you are doing, is like, I don't know if it's because of your background or if it's because to NFTs or because you really know crypto, but you are kind of like a very, I would say, AI approach to markets. What I mean by that is like, you are kind of like, your brain is like kind of an artificial intelligence, and you are taking data a bit over everywhere about market feelings, fundamental prices, and you are feeding all of that. And so your strategy is really changing. I had access to a bunch of your history, right? And so I had, it took me some time, but I read it. I read everything, and that's super, super strong. That's why I think we really make it. And I think that's one of the advice, and we don't give any advice, but one thing people need to be aware of is like, markets are changing. And that's why I really wanted to interview you, is like, from the thing I understood is like, you really have this approach that is, I think, the best way to make it in crypto is like being super agile, combining everything, and being like kind of like a real quant approach to the market. And I really like that. And talking about XRP and everything, how do you stay up to date with the market change, with the change of narrative, of trends, and how important it is in your trading strategy?
Yeah. So one of the best tools, and I'm sure this is like one of the best pieces of alpha that I could give, is using Twitter properly and having the tweet deck. You know, it used to be tweet deck, but it's now Twitter Pro, and putting specific people like Julian on your list, right? So when they're putting out information, whether it's a setup or piece of alpha, that comes through to a very dedicated feed rather than just like a very confusing feed of just everything and top news and everything. You really want to concentrate who you're following, right? They say that you're the average of the 5 people you spend the most time with. So if your feed is equally just a bunch of like meme pages and like news that isn't related to you helping get an edge, then you're not going to have a very focused kind of like alpha pace. So I use my tweet deck. I have it up, and then I have some notifications on from like a few of the big traders, like say smartestmoney.eth, right? So people that have like proven themselves, and I try to understand, okay, like what was their thinking behind this? Not just how much did they make or their entry and exit, but the approaches of the best traders. And that's always what I'm trying to do when I'm even just reading a trade setup or seeing what I think someone's posting. I'm always kind of analyzing the deeper reasons for something, and trying to understand, okay, what are the traits that I need more of to be successful? And so a good example, more recently, we've seen a very strong move on Dogecoin. Everybody's calling for $1 Doge. A few weeks ago, it was chasing every meme under the sun that just popped up on every pre-sale and every, whatever popped up. And then everybody, kind of didn't consider Dogecoin as even a coin to trade. And then sentiment shifted. Everybody's like, yeah, Doge is going to $1. Twitter payments, Elon Musk and all the rest of it. And just from being patient and just seeing, hey, okay, like the people who are placing their bets a few weeks ago are still in those positions. They didn't get shaken out and start chasing the next shiny object. They set their conviction, they had their idea, and they stuck with it. And that's something that I admire. And I was like, hey, I need to be more like that. So that's kind of the approach that I'm taking. I've taken a lot more in the past few months. And, it's funny because when this whole bull market started, it was fine. I was literally just moving to where we are over here in Dubai from London. And so the market literally was just upticking. I saw a few opportunities which were on the lower cap side. And maybe this is going into one of your questions, but one of the lessons I learned was just like having conviction to hold those, because again, you get caught into like the range trading or like the 5%, 10% move in a bear market, to conditioning yourself to like take that profit and move on. And there's a couple coins and projects that I saw a long-term success and vision for, but I got out way too early, like months too early before they did like multiple X's, like 20, 30 X's. And so I'm like,
timing
okay,
is very hard.
Yes, yeah. So just trying to be more, like trying to learn how the big guys play. Like, what's the thing I need? What's the character traits, the patience, right? The conviction, being comfortable with just sitting with that and not getting caught with too much information. So whilst I mentioned Twitter feed and having a curated feed of good traders and people you respect, also taking everything with a grain of salt and not taking it as facts and like literally, but using it as confluence or just information that maybe you can dive into and do your own research and build your own conviction.
Okay, that's honestly very interesting. I think the thing you mentioned is like convictions over shiny effect. I think, guys, you need to build some conviction. The shiny effect of like your friend shilling a new coin is interesting because like it could like bring some opportunities, some alphas, as I mentioned, and that's cool. But the thing is like you have to get your own convictions made the proper way. So of course, getting some information or some data from smart guys or guys who knows are not frauds, because there is a bunch of frauds out there of guys saying they are traders, but they are no traders. They never made money through trading, is very important because it's a way to fasten the process, that's why I'm connected to a bunch of smart guys. I'm in a bunch of groups and trying to grow that, because you are saving time, and sometimes you meet a friend saying, oh, for example, recently met a whale friend in Dubai, and he told me like, I'm doing that right now in terms of trading. Understanding his trade, I'm like, okay, I need to have a closer look and build my plan and build my conviction. I will not invest on his conviction. Copy trading is not the best thing. You have to build your conviction, focus on your trades, and then see how it's going.
Yeah, and also,
perhaps
when you do that as
you
well,
can tell us, because people always want to know that. Perhaps you don't want to disclose the numbers, but what was your biggest gain and your biggest loss in trading? Could be NFTs, or I mean in crypto. Let's say in crypto.
Yeah. I'll give more kind of like percent terms because it's all relative. I find even with like somebody's in like the deca millions, it doesn't mean anything to somebody, but if it's a percent, it might help. I'd say the biggest loss was from NFTs, also my biggest wins at the time. And it was a period of time where I got, and I explained the emotions as well. I got way too greedy because I was, as they say, counting my chickens before they hatch, right? When you're counting what you're going to make before you've made it, that is definitely a sign of you getting greedy and fantasizing about something that isn't true. And so I did my calculations at the time, which was like, if I bet, I think I can, I'll disclose this one. It wasn't like, it was an ETH, right? But ETH was all just going up. It was like 4K ETH. I think I put about 9 ETH into an NFT at the time, Pixelmon. It was a mint. So it was even less of a trading edge at this time. It was purely just going for a mint. They sold out at this 3 ETH mint price. Bear in mind, it's 4K, so it was around 4K. It was a very expensive mint, right? The most expensive probably in the history of NFTs. But the conditioning that we had in this period was everything's going to go up, right? So you just mint it, it goes up. Long story short, it was like instantly met with buyer remorse, right? Which everybody bought and realized, oh shit, like I just spent way too much money on this. And then it just created this big cascade effect. Within an hour, like my investment was like 50% down. So it was like, I don't know, like a 40K loss unrealized. And then I cut some, and then I held a few more, and then I cut some more. And it was just like a slow bleed, which at the time was quite significant on my portfolio. And, very quick loss, with no risk management, no really sitting with the fact that this could be a zero. And so I think it was like a 50K loss in the end. Again, relative to the time, my portfolio wasn't that big. It was a big dent. And emotionally, that set me back about a month. It took me so long to get back into like the mental framework of like making it back, even though I was already having wins. And you always feel your losses more than your wins, even if the wins are bigger. It's just the way we're conditioned. And so that loss was like, okay, don't be greedy. You need to like not over leverage yourself, which you don't learn these things when you're trading NFTs. There's no such thing. There's no course that teaches you about risk management, setting your, what's your risk reward here. You just kind of have to either know it or you don't. And I didn't know it. And I'd say in terms of biggest wins, they've definitely, they started in NFTs, more just buying and holding and being patient, which again, the market conditions were good. I'd say that there's definitely more movement into where we are in crypto, because again, I've been trying to size more, take more of those bigger bets. And more recently, I've done about a 3x on Ondo. Ondo, which is the real world asset token. I started building a position for
Amazing.
about 23 cents. Yeah, that was a 23 cents. And then I like doubled down on the last, and doubled down a bit more on the way up. And so this whole concept of like adding to your winners really kind of was like an aha moment for me. I was like, oh, okay, that's what it means to add to your winners, because when you add to them, you actually make more because you're just doubling down on the bets that are already going up rather than the losers. So that's been a very good win. Jupiter, another good win. So yeah, these are, you could argue they're quite big caps. And then there has been some like 5x low cap stuff as well. But the difference, right, is the sizing. And this was a thing, this is kind of where I am today. I'm starting to realize, all right, it's great if you can get a 10x, but what good is a 10x on 1% of your portfolio? I don't know, it's all relative. Let's say you put 1K in and you get a 10x. To some people, that's a lot of money. I respect that. But, if it's not a lot of money, like a 10x means nothing, right? So I'd much rather get a 3x and put 50K in a position, right, than a 10x on a 1K. And that's purely because like
100%.
It's what's going to move the portfolio, not just your ego and, give you bragging rights. And so I'm really understanding the sizing plays a big role in what's going to move your portfolio, which is, again, what I see the bigger traders doing and the most successful people in the space. And so I'm just trying to take that approach instead of having loads of small bets on, say, like loads of low caps, try and pick the low caps with more conviction and bet bigger into them, which they prove much more kind of like, they kind of compound your portfolio faster than just spraying and praying, especially where we've got loads of different chains
100%.
now, loads of different places you can trade. And the same for big caps, just trying to concentrate more there. and scale out. But yeah, a bit more sizing has definitely been
I
working
think,
better.
yeah, what you're saying is so insightful. I think I'm a bit at the same place right now where I think we both realize that it's cool to day trade, to have a bunch of opportunities, but at some point we want to develop big convictions and really size as much as possible in managing your risk, right? But I really recovered so fast from FTX thanks to Solana and thanks to many convictions I had where I played well. And now with some of the quant we are working with or analysts, we are looking back and saying, okay, we made money on this trade, but was it like random conviction? Why, why haven't we sized this trade? And for example, I think we have a list of 7 trades right now. We are really trying to build a conviction, ranking them. So I'm putting 10K here. Why am I putting 20K here? All this kind of stuff. And sometimes you end up having some shit coins in your portfolio where you have like, let's say, like recently I have like 5K on a shit coin. I was like, what this coin? I don't know the fundamental. Why do I have it? It's just like sometimes I didn't manage my risk the proper way, and also the conviction, And I think adding conviction in the equation is very hard because we are always biased. When you start longing and it goes well or not, you're like, okay, it's the next big trade and everything. I'm so bullish. It's an effect I don't really have because I'm very rational and I have a plan every time I enter a big position. But still, I'm like a bit like sometimes I'm like, for example, on this recent dip, I wanted to add on my convictions. The EV of adding was not the best, so I didn't touch. And some, especially one, it really dipped a lot, and I was like, okay, I could add some position, and I was like, I end up not adding that much, and I was like very frustrated. I was like, is your conviction that big, And I think that's the thing. And from all the big traders I have met, like nine figures kind of guy, or even like 8 figures plus, very sharp guys who really made it through trading from 0 to 8-figure plus. It's like they have this approach of conviction that is different. And recently I met a guy 9-figure plus in crypto, and I was chatting about him. He was shilling me a lot of things, and I was like, I'm confused. How can you be on all this kind of stuff? And for example, he shilled me. I'm not going to disclose the coin because perhaps people can reverse engineer the guy. But let's say he shilled me like ApeCoin, and I was like, why? And he explained me his theory, and I'm like, okay. And I'm like, how much you have on it? It's like 100K. But I'm like, man, your average size is like, it's not even like 0.1% of your folio. It's like, yeah, you're right. And like, and how much do you have on, let's say, a Jupiter? It's like, yeah, on Jupiter, I have $12 million. I'm like, okay, so I was starting to reverse engineering what he was doing based on the sizing, And so I was like, okay, so you're not that bullish on ApeCoin, you are more bullish on Jupiter. And then he had another big position on this kind of like small altcoin. And I was like, oh my God, that's a lot. Like, and that's the thing he was doing without knowing it. It's so clear in his mind, his conviction, and all the research he's doing that. And that's always the same. That's the quant approach too, because I'm the quant. So that's the quant approach to trading. Is like trying to feed first your model with as much data as possible to try to make sure that the probability, the scenario you are facing in terms of probability, has the minimum variance. For example, I don't know. I had a guy recently who purchased a coin. I will not disclose that, and he was not aware about all the unlocks coming of some FUD inside of the team and everything. And I'm like, bro, I would not be like that convinced about this trade if I were you, I'm not saying it was a bad trade. It's just like, if he made it, it was kind of like some luck, And you want to make sure there is no room for luck in trading, especially when you put big conviction. When you put 10%, 20%, 30% of your net worth on a coin, you need to have all the stuff aligned. So that's very important.
Just wanted to mention on that point there where you said he didn't see if there were unlocks and stuff, and these are unfortunate things you sometimes have to learn through experience, where everything technically looks good, but there's a 20% unlock tomorrow that you just oversaw. You get, it doesn't play out because the technicals were good, but there was a fundamental shift, right? And that is almost like an opportunity for you to learn. And like, I always see I don't look at losses as bad things in anything in life. I look at them as opportunities to learn.
Same.
And that's just a reframe, right? And just if you tell yourself, okay, there's an opportunity to learn here, rather than just like brushing it away and pretending it never happened, you never learn and you repeat the same mistake, which is what's happened to me a couple of times. I've learned the same mistake twice, and you shouldn't learn the same mistake twice, right? You should learn the first time. And doing that is just reflecting. And that's, I guess, where the journaling comes back, or just sitting and looking and just questioning yourself. And it's hard to do that work. It's hard to do that in anything in life, whether you have an argument with somebody and then you admit you're wrong. It's just like a way of being with yourself that will help you grow as a person, not just in trading, but in everything in life.
100%. And always the thing, like when you enter a trade, things can change, you know? And for example, you enter a trade on the thing and then the macro change or anything, and people are like, oh, it was such a bad trade. Recently, I was chatting with a friend and he purchased like a dope watch, like a Patek Philippe, kind of cool, you know, very cool watch, solid watch, like at the top of the bull market, you know? And he was like, bro, I paid like $150,000 for that, and now it's worth like $90,000. And he was like, such a bad trade, blah, blah. And almost saying Patek Philippe is a scam, you know, like, because it's the crypto bro, like a crypto bro, when he doesn't like money, say it's a scam. And basically I was chatting with him, like, you know, at this point, like it was top of the bull run. He was based in Dubai. You were trying to get some money out of crypto just to free your mind. You purchased this cool watch. It was a cool trade because you were like, the relative value of, like, you knew like the drawdown on watches were going to be smaller than Bitcoin. And I was like, I think your mistake is like, when Bitcoin was at 20K, you were not like, okay, now do I rotate my Patek Philippe back into Bitcoin, you know? And if you have done that, you would have protected, like, you have overperformed like by 40% plus Bitcoin. You rotate back into Bitcoin, and that's the few trades I did, you know? And he was like, oh yeah, you're right, and everything's approaching the different way. And that's the important thing, like, and that's the thing I think we feel you have, I don't know where it's from, when you do a good trade or a bad trade, was the bad trade that bad, and was the good trade that good? You know, sometimes you had bad trades that are better than good trades. And it's not because you lose money that you have to say, oh, I don't want to touch this coin, these guys are scammers or whatsoever. And then it's also cool to know, like, you need to avoid some projects in crypto because, you know, the team are very predatory, the token economics is predatory, and the counterparty you have could be a market maker, could be very sophisticated guys, VCs and everything. And you're like, okay, that's the thing I don't want to touch, you know? And that's why I'm really pro meme coin, beside the fact that people say there is no fundamental, is because on meme coin, your counterparty is like another trader. You don't have unlocks, you know, it's kind of like different. I think the way you approach the trading, and I think that's the most important thing.
Interesting, man. That's a very interesting viewpoint of meme coins. And I traded meme coins a bit, but I don't feel my edge is as strong with them because, again, the conviction part, I just don't feel is there as much. Funny, one of my would have been best trades would have been the Pepe trade from the bottom. I was literally in from the bottom of that bottom range before the complete breakout. And I was planning to leave some in for the inevitable breakout. And then I decided to close at the top of the range. And that was literally the last time Pepe was down there. And that's, you know, just because I just felt like fundamentally I had a thesis for Pepe that it was going to be the ship of this cycle. And it was ingrained in me mid last year when Pepe got into the news publications. I had my brother saying, hey, what's this Pepe coin? I had a friend message me as well who was a bag holder from the last cycle. And instantly in me, that told me that there's something more to this. It's just not its time yet. And so in the bear market, I was very convinced that Pepe would have its day. Thesis was there, believed it, did a couple good trades on Pepe. And then just this last time that was meant to be like, which would inevitably be the move, I didn't convict myself enough to both size in and keep what I should have had. So yeah, meme coins are really interesting. They're your best friend and your worst enemy. More recently on DGen
I think on this part, on the meme coin, we chatted like RRL about that. And I think for meme coins, I don't want to leak the alpha here, but the mistake you make is not where you thought it was. So it's a bit different, but I'm not going to reveal it here because I feel I have enemies watching. So I'm very cautious to what I say on socials, unfortunately. But great insight. Last two questions. I would say, what would you say if you could meet yourself like 3-4 years ago, or even 10 years ago? Few advice to yourself.
There's many things. I'll keep it very trading specific because most of the listeners here are wanting to listen for some trading alpha or build their edge. If I was to talk to myself or give myself a piece of advice, it would be, the first would be very simple. Don't get greedy. because in those moments of greed are the times that I've given the most back, unironically. Know what risk management truly means, not just knowing what it means, but like diving into it and not being like overconfident, like you can beat the market. And I think that's another thing, like never think just because you have some skill or some confidence that you can beat something. Like always be open to the possibility that you can be wrong. I think in business, prior to trading, you learn that being confident, being hardworking, being smart, all these traits are what you need to be successful. Whereas in trading, you need to learn to be kind of neutral, right, to different possibilities, to never think you're the best thing ever. And so just being humble in the markets, I think, is like a really key thing that I didn't appreciate until going through the bear market and being humbled. But I guess a lot of people still have to go through those experiences, no matter what advice you receive. A lot of time we can give the best advice, but you know, in life you kind of have to learn from your own failures, which is sad but true.
I like what you're saying. I like what you're saying, and I think that's the difference of being smart and super smart. And I had one of my previous boss when I was working in a hedge fund. He was always telling us, guys, stay humble, otherwise you will get the market will humble you. And we were all so scared because we didn't know what he was meaning, you know. But we were also scared about the market humbled us. And the other partner of the fund was like a perma bear, you know, because in stocks there is some perma bear about guys saying, of course we are long Nasdaq, we are long SP 500 because we think to go higher. The models say that and everything, but they're like, we don't understand why it's going higher, you know. And they were like always perma bear. Telling us so many crazy stories about the subprime crisis, a lot of bubbles and everything. And we were all like so scared that we were like, okay, we have to stay humble. And I think in crypto it's even worse because we're perhaps entering like the new, I would say, cycle, the bubble. Perhaps Bitcoin will go to 150K, but perhaps after that it will go back to like 50K, and people will say, oh, it's the best asset at the top and it's the worst asset at the bottom. No, it's always the same. But I like what you say is like, sometimes it's good to be humbled. But I think on my side, I'm like, I don't want to be humbled. So I'm always very cautious and I prefer to go slower than being humbled at some point. To end up, not financial advice again, what are your predictions for the next big opportunities in the coming months, coming weeks? Can you leak some alpha? What are your biggest convictions, I would say, if you can disclose?
Yeah, absolutely. I mean, not financial advice. I don't know what I'm doing. I'm just, a guy on the internet trying to figure this out just as much as the next person. I more recently, as I mentioned, Ripple, I started building some big conviction around it only in the past week, right? Firstly, the technicals didn't look bad. And then when you look at the higher time frame on the 3-month, there is a very huge kind of wedge triangle formation. And, there's just a lot of patterns to the 2017 technicals, firstly. So firstly, is something very interesting on the technical side. And then I shared the full kind of fundamental side on my Twitter, right? Of the fact that if the SEC lose against Ripple, it opens up this continued opportunity for upside. They're working with banks. They were top 3 crypto projects several years ago, and they're not being spoken about at all. So I've built, and this could be like a 6-month play. It might not happen as in the time frame that I would want or people would want, but where I kind of at a decision moment, I think for it, that it resolves. And my personal belief is to the upside at some point. If it doesn't, no problem, end of Ripple. But I don't know. And one thing I really started to bet more on through crypto and is just like cult communities. And I think that's very underrated. We've seen it with meme coins. And we've seen it with Ripple in the past. And funny enough, Ripple was one of like the first coins I held in like 2017, and I just had it in a wallet that kind of just went up and went down and never went up again. And I think there's a lot of those people out there who are holding for some hope, right? And a breakout of a 6-year consolidation would be ridiculous. And so got some interesting thesis around that. Whether it plays out or not, I don't know. And there is a huge opportunity cost that if it doesn't play out, of course, that you'd be holding this bag for a long time, which I'm fully aware of as well. Wouldn't want to, but hey, that's part of the game. Where do I see this going? I think the real world assets, as we've seen currently, is picking up. I think that narrative will continue to build. I think the lower caps will continue to kind of like come forward and start moving into like mid caps. And I don't know. I feel like that area of crypto is going to become more of a push narrative because of the whole BlackRock pushing tokenization of assets and coming onto the blockchain. I think we can't fade that big institution being a big key player. I think it's still early. I think gaming, we saw a taste of it at the back end of last year. I think gaming hasn't had its second wind yet, which I think should happen in the next couple of months. So I think getting positioned in gaming, especially the lower cap ones, infrastructure, of course, is a big part of gaming. So if you don't know the games itself, infrastructure is a safe bet. A couple that I was big on from the bottom was Beam. I actually was in when it was Merit Circle, did a bunch of trades, held some of that. So I think gaming is
Merit Circle, right? For the OGs.
Yeah, I mean, again, that was an example, as I mentioned earlier, of like a great trade just didn't hold long enough for like what we've seen more recently. So still believe like gaming is going to be a strong narrative. And I think for like AI is like pure speculation because there's just so many AI projects. I believe Tau will continue to perform. I know it's a very high market cap, high price, but based on what we've seen in previous cycles, and people building on Tau and launching tokens on Tau, I think that will continue to perform. And I think AI bubble is just kind of getting started. What we saw in the past few months was just like a taste of the AI bubble. And I think the AI bubble will become like the metaverse of the last bubble, the last cycle, where they just go to crazy valuations and then they crash heavily. So this time we can get the short button out and we can click red because, I didn't know how to do that last time. But I think there will be a time in the future maybe where WorldCoin can get heavily shorted. But for now, I think playing the upside is definitely where the money is. And then the last thing is, the meme coins as just like a very interesting space. If you have conviction, they are proving to be, big winners and will continue to play out. I think coins like WIF and Pepe are kind of cementing themselves as the Doge or as the Shiba of this cycle, and that will continue to play out. I think all the narratives that were being pushed in the bear market will just play out. Say is the new soul, Saiyan, and I feel like whatever's being pushed right now will just continue and just expand to like more people. It's not that they go away, it's just it expands. And Pepe was a prime example of the Shiba of the next cycle, and then it looked like it was going to be dead, and then it plays out. It's just if enough people say it and believe it, it eventually happens. And so I think just everything that's been predicted in the bear market will just play out in real time over the next couple of years. And maybe we top 25 at some point. I don't know. I'm not going to try and call a top at all, but I'm just going to ride whatever wave we're in for however long we're in it.
Yeah, I really like that. I think you are the wisest in the room right now. I really like what you're saying. I think the main thing you're trying to give us is like you have your conviction now, your narratives, and most likely they will evolve, and you will evolve with them, and you are like not fixed in a position. And I think that's the smarter move. Like I think convinced by that, and I really like that. Thank you very much for I don't know, last thing, since you're NFT OG, what are the cool collections to buy? Like, will Bored Ape make it? What do you think about Penguin? Everything.
Yeah, so I have an Azuki. It's my profile picture. It's what I like to rep. I like the art. I think what's interesting is the narrative of ordinals are the NFT of this cycle is what's happening right now, where we're seeing ordinal prices at quite sizey floor prices, flipping many of the ETH collections. So I think we're going to continue seeing that strength through the halving as the BTC narrative continues to be strong. I don't think it will go away. I do think the tech isn't very comfortable, and obviously it's very slow, but there is a 100%. Big community building there. Yeah, so the community is legit. There's obviously Bitcoin OGs that might start rotating and collecting, who knows, even if they don't love the tech and love what it is, because it's meant to be like a breach or something in the Bitcoin contract. On the ETH side, I see the token, the NFTs that have token value are currently still the meta. So things that have gaming tokens, for example, that they'll get some airdrop allocation, they are still holding their floor price until those games launch or they TGE. And then the profile pictures, like the apes, the Azukis, the Pudgies. I mean, Pudgies have obviously kind of created their own ecosystem and world there. I think we need to see some form of like stabilization around ETH price, because every time ETH is going on this crazy pump, floor prices are dropping because people are wanting to liquidate and take their ETH and cash it out. Once we see some stabilization and then a lot more ETH millionaires and billionaires again, naturally, I believe that they will want to have some form of like social flex. And naturally, what would be the thing to do that would be one of those prestigious NFTs. And it's funny because like Bored Apes, of course, the floor price is heavily down, but it's almost like one of those stories, right? Every time something gets that far down, at some point, someone decides to call it a day and make it bottom. And also the fact that of mindshare, the mindshare that they took up in the last cycle, you can't fade that. Eminem and all these rappers and all these celebs having these profile pictures. Someone might just go, hey, this is actually so much cheaper than it was 2 years ago. Because a lot of people, they're not in the space. So we don't know what they're going to think. And they go and see a ticket price of 10 times less than what they saw last time and they can get in. Maybe that kickstarts it. But I feel the retailers will be the ones to kickstart the NFT meta, because that was kind of where it ended. And that will be where the more exciting speculative money comes in again. But I think we still got a little way depending on what happens with ETH.
Yeah, I love that. And if I were to buy, let's say I want to buy a Bored Ape, like, would you recommend me to ape in at 13 ETH floor price, or try to wait for ETH to push higher? I don't know, because people say like Bored Ape, like the floor price got nuked, but I'm like, okay, but still in dollar value, it's okay, it's all right. Like it's more in ETH value. And when I buy an ape, I'm more buying it like in dollars than in ETH value. So I don't know.
Yeah, it's one of those ones. If you've got a lot of ETH and you want to leverage your ETH with an NFT and you're happy with the fact that it's illiquid, I think, there is the obvious opportunity cost of holding them. It just depends again, it's down to conviction. I personally don't want to be holding lots of NFTs at this time because I prefer, as we talk about, the liquidity of just tokens and being able to get in and get out, and adjusting based on your size. But I do believe if people do have the capital and belief that whatever is being built, by Yuga, by Zuki, by Pudgies, like they believe that they will have, do something significant. Why not park some ETH there? I mean, it just depends on how much ETH you're holding and, again, percentage of your portfolio that's going to take up. But the upside would be tremendous if there's even any hope that these things can go back to close to an all-time high, right? So risk reward, yeah.
Yeah, and I like that. And I think if you were to buy an NFT of a collection, try to get involved in the community and try to think, what can you do for that? I recently acquired like one NFT from one collection, and I think I've already did my ROI, like I would say, on the NFT itself, just because of the connection, the networking, the help, and yeah, that's the cool thing also for that. And I always see people complaining about NFTs, but if you purchase your NFT and you sit on it, I think you will not go anywhere. And you have to be part of the community to be very active. Thank you very much for your time. It was a super long interview, very insightful. I think it's a very advanced and very mature interview. Hope many people, I'm 100% sure many people will watch it. Those who will watch it will rewatch it, just because there is so many insights and so many ways to save so much time and save so much mistakes. And that's the cool thing of this interview. So thank you very much for for you being honest, sharing that much about your story and your trading. And I hope you will get a better trader every day.
Absolutely. Thank you so much for having me, Julian. And good luck to everyone out there.